this is the last time I'm going to take any time off. It seems like every time I do, the world descends into chaos and madness. I'm kidding. I'm not responsible. It's not correlated to me. I want to say Happy New Year to everybody. It's 2026. Holy moly. That's crazy. I don't know. I'm trying to get... I have all these tools for all this analysis of the S&P and all this fun stuff, but I can't make time slow down. All right, if you guys figure it out, let me know. Happy New Year to everybody. This is the first morning market update back for me. I had a little bit of a flight delay coming back into Florida from Toronto on January 5th rather, and it went all the way to midnight and past midnight, and things got crazy and wild. There were snowstorms in Ontario and all this stuff. Basically, I couldn't make it yesterday. I'm really sorry. I had to sleep. It was crazy. But I'm here today, and I'm back to the morning market updates. We're back to business as usual, and we're back to some really great and big things. So before we kick off today's morning market update, I'm sure you've heard the announcement and updates, but I'm starting a new course. It's going to be order flow focused. And in January, towards the end of the month, I'm going to be sending out an invite for you to join our webinar to find out more and what it's all about. But I'm basically rebuilding a new order flow specific S&P 500 futures trading course that you could apply to any instrument once you learn the principles and the fundamentals of what you're about to learn. And then we're also opening an order flow specific trading room which just focuses on that. More of that details coming up soon. Just want to kind of prime you into it. And you'll hear more about on the podcast. If you want to get like a little pre-course order flow pickup, like a pack of really great lessons that are foundational to order flow that I wish I knew when I started, because I started with the technical details, but lacking the most basic and primal understanding, which I think is the key to making these concepts stick. Then check out our podcast, because the next 4 episodes are going to be jam-packed with that kind of value. Very basic, but powerful. And you might find out that this stuff isn't that basic. And I wouldn't want you to miss out on that part of the process, because I did, and it took me months to kind of put the pieces together for the fundamentals of the entire order flow analysis industry. So that's going to be on our podcast, Mind Over Markets. Check us out at Mind Over Markets. Next 4 episodes are dedicated to that, and it's going to be fun. And it starts this week on Thursday, tomorrow. And fun fact, I still have to record it. I'm going to do it today. All right, market snapshot, S&P 500 and flat, and NQ flat, Russell flat as well. European markets are mixed this morning. Dollar index is flat also. Gold is down almost a percentage point. Copper is down 1%. Crude oil is down almost 1%. We'll talk about why in a second. Bitcoin's down 2%. Ethereum's down 2.4%. All right, overnight, Wall Street hit fresh records on Monday, but the APAC session couldn't sustain the momentum of the rally, and we're seeing other assets outside of equities start to give back some of the gains. All right, will equities hold? Well, I have a narrative for you today. All right, the key headlines of today, and look, on Mind Over Markets, on TradePro Academy, on these morning market updates, everywhere that you hear anything from me or my people at TradePro Academy, we aim to be inclusive and not divisive. All right, so I stay away from politics for political nature. I only talk about politics as it pertains to the market. So Venezuela, Trump announced Venezuela will hand over to 30 to 50 million barrels of high-quality oil to the U.S. on the daily basis. That's going to be sold at market prices. So let's stay away from the danger territory here. Let's talk about what this means. This means the U.S. just found a new line of supply for oil. All right, how we got it, we'll talk about. Well, we won't talk about that, but 30 to 50 million barrels a day coming online is very significant for sale. So that increases supply. Therefore, oil is having a bit of a hard time comprehending that, and it's down 0.7%. When the news came out about Venezuela, the first thing I had looked at is the oil market. I was sitting on the couch with my dad at my sister's place. We're waiting for the futures reopen on Sunday at 5:50 p.m. And I was like, I wonder what the ES futures are doing, because naturally that's my instinct. That's what I kind of follow. And he goes, forget ES, pull up oil first. And so we were together in the family living room of my sister's place waiting for the oil futures to reopen. So the events today at 10:15 a.m., we have ADP employment. We have that report. Sorry, that's 8:15 a.m. ADP employment report. That came out of 41,000 versus 47,000 expected. All right, and 10 a.m. this morning, we have ISM Services PMI for December. So the data that was backlogged from the government shutdown is starting to catch up. We're starting to get fresh and recent data, which makes it more meaningful. Keep an eye out on that. And keep an eye out at 10 a.m. JOLTS. All right, you will be jolted to find out that JOLTS is coming out at 7.61 million jobs expected versus 7.67 prior. This is an important number because it is a precursor, an early look, a suggestive type of information for this Friday's all-important non-farm payrolls report. Okay, because this Friday we get it fresh, we get it at the scheduled time, and we have a Fed meeting that's waiting for it probably more urgently than we are. So Friday, this morning, 8:30, not this morning, but Friday morning, 8:30 becomes a big day. All right, Fed's Bowman is speaking today. On the corporate front, we have NVIDIA news. The CEO says Chinese demand for AI chips is quite high. H2000s are flowing. The sales are flowing. They were authorized to sell them late last year, and the sales are coming through. All right, Chevron, Conoco, Phillips, and ExxonMobil are meeting with Trump on Friday. If you're an oil trader, this becomes important. Something can come out of that. All right, that's it. Let's talk about some stuff on the chart. I'm going to turn around. I know that maybe maybe I made the wrong decision, but I know that a lot of feedback's been less kind of news unless it's critical and more time on charts on the morning market updates. I take that to heart and I like it. I like that suggestion. So I'm going to spend a little less time just going into the news and into the weeds and then coming back to the main route and going to the chart. So let's do that now, because for the rest of the morning market update, we're going to do the call and put wall levels on the 0 DTE and 1 DTE options. And then we're going to also talk about some market stats. Let me give you the market stats here, actually, because I don't need to turn around, then I'll turn around. So real quick, here's the stats. 68663 is the January 2nd and yearly low in the S&P 500 futures, all right? And just 3 trading days, we're up to 69.91.5 on the overnight high as of the point I turned my back. Maybe it broke it by a little bit. That's a 125-point rally. Okay, but take this in. January 6th volume yesterday, 1.19 million on the S&P 500 contract. All right, January 5th, 1.26 million. January 2nd, 1.57 million. So volume is still lower than the average of what it should be. You know, it's around 2 million contracts, and it's decreasing. And in fact, December 15th of last year was the 30-day high of volume on the S&P 500 at 2.12 million contracts. All right, and December's a little bit lighter volume to begin with. So if we can't get a nice push today and volumes are turning, it could be a story of this decreased volume leads us into a multi-day consolidation and pullback in the S&P 500 futures, because we've opened the market for the new year. We've done the job. It's rallied. Now we could be looking to catch a little bit of consolidation and retest downward to some supports to find some more buyers. But we don't know that yet. I'm going to turn around. I'm going to share some stuff with you on the chart. Let's get to work and let's get down to business. And I got to switch to my other template. Let me look at this haircut, guys. I went to this. Okay. I went to get a haircut yesterday, and the guy that I had used went back to his country. That's what he told me. He's like, he's back to his country. He's like, I know exactly what you want. I used to see you here all the time. And I came with so much hair. And I told him, just leave a little more at the top. I look like a soldier when you guys make it so low. And then he made it low. So I got a bad haircut for the next couple of weeks. But here we are. I just realized that when I turn around. Let me answer a few questions. Sharp haircut. You like it, Marco? I don't know. I feel like I look like I'm going to Venezuela too soon. Welcome back. Happy New Year, Mikey. Hector, hello. Julian, what's up, brother? Is there going to be a part 2 to the footprint charting to the TradePro course? Is this a recent one, Julian? Or an older course you're referring to? Because if it's a recent one Victorio's talking about, I'm actually doing a full order flow course myself. But I don't know if there's going to be a part 2. Honestly, Victorio, you like it, Mike? I don't know, man. I'm not used to it, I guess. All right, cool. You guys are a very supportive group. Thank you. You're helping me get my 2026 confidence on. I like it. Thank you, boys and ladies and everyone. I appreciate it. Maybe it'll grow on me. Yeah, let's get into the charts. And, you know, haircut's one of those things that could make the biggest difference. and you might not realize. It's like it's a big thing for confidence. Okay, so this is what I was planning to talk to you about. So the options levels for today, let's start there because I think it's important. We have the first massive resistance that now is support at 69.46. All right, and down here, the light blue on my charts are going to be the options inspired levels. At 69.46, there's 27,500 contracts of open interest. Okay, the next one up is 69.91, and now these are adjusted for ES. The basis between SPX and ES, these are basis adjusted levels. So you just plop them right on the ES. So 91.5 is the next big one. It's funny that that's the big one because it's exactly where the market is having a hard time combing through. So those are the big levels that you kind of got to watch for and put on your chart based on the options front. Okay, we went through the market stats. Let's go through and replay the story of the last 24 hours and then set the levels for today in the trading plan and get down to work. So that's what we do. Okay, so here's the situation. I did the wrong thing. Markets rallied right off of the open yesterday, okay? And I didn't trade yesterday, so I'm telling the story to myself as much as I am to you. Okay, so markets rallied right off the open, about 30 point, nice big run up. That's a big continuation. We swept through the prior high. Everything's good for the bullish side. All right, then sellers faded it back down into the 5-minute opening range. These two yellow lines that separate each other, this is my opening range, my OR, and it's 5 minutes. You see ORH, opening range high 5 minutes, opening range low 5 minutes. So oftentimes on trending days, if you're looking for a strategy of where to get in and you're really confused and you want something that's very set and not subjective, opening range is a great place. If the market rallies upward and you have a continuation day, it does often retest the opening range before continuing even further. But it's at best like a 40 to 50% win rate on this strategy. You really have to filter it, and then when you filter it, you eliminate some of the good days. So I use opening range as a level more than a strategy, but I have used it as a strategy. It does work. It just could be stressful on the days where it doesn't work. All right. So there's a pullback. We get that. Buyers take it and run it all the way up to 91.5 off of that level. All right. And then we close 4.5 points off of the highs at 86 or at 87 even. So all in all, a very bullish day. The construction of it was bullish. The overnight story of the market, let's zoom in just a little bit, is a bullish one as well, right? The overnight story is that equities couldn't reclaim this high of 91.5 on the overnight session. So we closed yesterday and we've been below the high of the day. We couldn't reclaim and push to a new high above that, but the pullback was also only down to 75 quarter, which is not that significant. It was right at the prior consolidation, right at the prior top. Holding that level is a bullish thing. All right. And then price is now kind of back at the prior day cash close, which is the 50-yard line for all intents and purposes, because that's where we closed. So overnight, we haven't had any data that could help us any further than the pullbacks were shallow and they were eaten up pretty quickly to the buy side, which then now brings us, ladies and gentlemen, to the trading plan of the day. And I have 3 levels. 1, 2, 3. One of them is the married level with my ring. So that one's going to be special. Let me see. Wow, Sierra on Mac, does it run smooth? What RAM do you have? So the Mac is my midlife crisis into music production. That explains the Mac. I love Mac. I'm never going back because it rhymes. See that? Maybe I am still in music. Maybe I'm supposed to be a rapper, not a producer. Maybe that's why it didn't work out. See you guys. No, but the Mac is a wonderful computer. Did you know that Mac hardware runs Windows the fastest? Isn't that funny? But anywho, the Mac works with something called Crossover, FH Volume Trader, and Sierra works so solid on it that it's shocking. Like from scaling to everything out the box is so clean and good that I figured I'd try it, wanting to be disappointed, so I go back to Windows, but it wasn't. It was actually a very sturdy platform. It works great, and it works with bottles and all this other crap, but it's called Crossover. It's a relatively inexpensive program, and you install Sierra, and it works so smooth. And you could use it anywhere. There's no backing up and nothing. Anywho, thought I'd bring that. Let's go to the trading plan. This is the 3 levels. Okay, the first one, I'm going to go one by one. 91.5. I mean, you got to mark that. That's what's in play right now. Number 1, because it's an options-based level on 0 DTE. And number 2, it's because it's an overnight high. And number 3, it's because it's a prior day high. And number 4, it's because it's a high. There is no number 4, actually. There's 3. So if 91.50 breaks, okay, let's say we get up here this morning, 96. We're trading here at 9:40 in the morning. You're not taking that and saying, I'm going to buy it right away. What you're looking for is order flow. Are there big orders supportive of here? Are there buyers coming in? Are there sellers getting out of the way? Are there limits on the upside reducing or lifting and big buy orders chasing it higher? We need to have a bullish supportive narrative to buy it here, because it is the riskiest place to buy it all year because we're on highs, right? But if 91.50 breaks, watching flow and volume, we need to continue right here, all right? We can't sit here and mess around. But the problem is 7,000 overhead's a really big resistance. How many times, if you've been trading a long time, you're going to nod and say, oh yeah. How many times have we traded to like within 2 points of a big level like that and dumped 300 points? Like, you think about it. If it goes to 69, 98 half and then drops 200 points from there in a multi-day pullback and consolidation cycle, nobody should be surprised. Okay, that's what makes me nervous about the long up here. You don't have too much runway, but nonetheless, you can't kind of guess these things. You got to go with them. So if the flow is supportive, regardless of the 7,000, I'm going to have to get the trade to the upside. All right, if we break above 91.5. And I'm not going to be afraid to do it because I'm going to have order flow. If the trade disqualifies itself, I'll be out before the dump. All right, that's just what I rely on my order flow tools. All right, that's a 91.5. Just watch for that. That would be the long side. And be a little nervous as we approach 7,000. If you break it clean, you've got a lot of gamma hedging to the upside. We could easily have a 30-point day and top out at 70-30 on today's session into the closing bell. All right, maybe even 70-40, depending on how much gamma we unlock up there. Okay, the next level is if 91.50 doesn't break. Same level, but different trade. If we can't break this 91.50, or we break it a little and we come back down, and we see order flow supportive to the downside, not the upside, then it's short time. All right, and it's as simple as that. If the buyers run out of gas, or if there's too much buyers and the price can't go up, we're setting up the trade for the long. And yes, it did break, but this is why I said it's not just about the level. It's about looking into that candle and seeing what the market looks like. If there's bullish support for it on the order flow, we're going to try the long. If there's a lack of bullish support and it in fact shows you that it doesn't have the steam and gas to continue higher, then we're going to turn down and work the short side, because we got a move all the way down to 75 quarter, okay, which is 20 points. Nah, not 20, but almost 15 points. Below the 75, it gets ugly. Okay, and then the last thing is this. The last thing that you want to keep a note of is, yes, the battle's all 91.5. Above and bullish, we get long. Above and failing, we get short. Okay, so that level is going to come into play. Order flow will be the deciding factor. If we miss those two, or you want to be a little patient and wait for the next one, I think 75 quarter is the next support level. All right, 75 quarter is the overnight low. All right, it could be a good long level. We need to see a lot of support there and order flow, because this could also just end up being a head fake, a temporary stop. Then we blow right below it. There are a lot of sell stops right down here, all the way down. This whole thing is sell stop territory. If we could wiggle that price below 75 quarter, we're going to go down quite quick and sharp into the mid 50s to high 40s. All right, lots and lots and lots of sell stops. So the plan then, let me just clean it up and simplify it for you. Above 91.5, there's going to be some bullish opportunity if we see the right things. 77,000 is a careful moment, temporary stopping hurdle. If we could break 7,000, it's buy gamma release, or gamma release, gamma stops. Everyone's going to be buying in. Self-fulfilling prophecy. You get a 20, 30-point rally. All right, if that doesn't happen, we go down. So we're going to try the short. If you're not comfortable taking a trade at this level, the risk you're taking is this thing running away from you, and you not being able to get in all day because it just doesn't pull back at all. But to be honest with you, I've never lost a trade I haven't taken. I also haven't made money on a trade I haven't taken. But if you're thinking risk first, if you're going to decide not to participate there, just stay out all day. Don't decide now, I'm not going to do it. Then it gets there and then you do it. All right. And then 75 quarter could be a support for a long opportunity. It would just make sense. Below that, you're seeing sell stops down into these mid 50s. All right. That's the plan. Any questions? Yeah, for sure. FH, check it out, man. I'd love to hear how it goes. Keep me posted. Let me know how you liked it. But yeah, it's called Crossover. And then when you get it and download it, they have a 30-day trial. Don't pay for it yet. Try it out first. And you search for a quote-unquote bottle, and it's called Sierra Charts. And it installs it for you and everything. Do you know any platform to get decent GX levels? There's GX Stream, but it's kind of slow. Bar chart. What's GEX levels? Mateus Z Barda 1671. Pardon me 1 second. Is that crypto? You asked for crypto? That's it, guys. That's the first morning market update of the year. I hope you enjoyed it. I hope you got some value out of it, and we'll be back tomorrow. That's what we're looking at here in today's session. Let's see how it plays out. You're gonna see a lot of stuff coming up down the pipe on here. I'll make a lot of announcements and a webinar coming up. Oh, gamma exposure. My bad, bro. I don't know why. Sorry, Matt. I don't know why I didn't put that together. I like interactive brokers because it shows me open interest. If you're gonna look at gamma and options level, especially for like levels to put on a chart, the most important thing is to have a platform that shows you not volume but open interest, because it's very different. Open interest is more important to gamma levels and gamma exposure, and then seeing where there could be a big gamma buy-in or gamma dump. And what I use is interactive brokers. I really love the platform. You don't even have to pay for the data to get the options analysis. You just go new tab, options analysis, open interest, open activity, and then put the symbol and select open interest, not volume. Very important step. But yeah, Matt, that's one way to do it, interactive brokers. I'll research and see. I'll ask around, see what some of my friends are using, because I know a lot of them lean on this gamma stuff, and I'll report back. But for now, that's what I use, interactive brokers. That's it. Love you guys. Have a great day. I got to get into the trading room. I appreciate you. If you guys want to join us, check us out, TradeProAcademy.com. We do this and more every single day. And we're going to do more of it tomorrow. Happy New Year. I missed you a lot. I'm happy to be back. And we're back to action tomorrow. You guys have a great day. And thank you for boosting the ego and confidence on the haircut. I was a little self-conscious. Now that I know my team's got my back, I'm going to play to my strength. Appreciate you guys. You have a great day and good trading session. I'll see you tomorrow, 9 a.m. Take care. Goodbye.